Hello everyone. So today we are going to start with fundamental analysis of Shalimar Wires Industries Limited. Let's just understand what the company is into. The company is in paper mill and EDM wire. The name suggests Shalimar Wire Industries will be in the business of wire. Uh, However, the EDM wire business has been discontinued by the organization, and most of the revenue comes from paper mill products. The company is headquartered in Kolkata. Major shareholder Reliance Sheetworks Private Limited, Sunita Khaitan, Vedant Khaitan. So Reliance Sheetworks Private Limited has been a part of this investment. So it provides some comfort to other retail investors. Business two businesses primarily printer mill products, EDM wire, which has been discontinued. Um, we can see that the organization gets most of its revenue from India and some of it from outside India. Now, big competitors for paper industry include JK Paper, Westport Papers Limited, Andhra Paper, Tamil Nadu Newspaper, Shesha Paper and Boards Limited. Market capitalization starts with 5,000, 6,000 crores. Then it drills down to somewhere around 5-10 crores as well. PE ratio of 5 to 10, then PB ratio of 2.2 is maximum for JK Paper as of now. The index. We have created the index for paper industry using the top five firms, these top five firms. And we see that the industry reached a peak in 2018-19. From then, it has been having a downturn. Even the COVID rally was not so big enough. It has again going in the downturn. Now, let us compare the performance of a stock in comparison with the index. Uh, The stock has performed well at the peak of the industry, whereas this has fallen to again lower heights, lower lows as the industry falls. So, this being a small cap company, you see, as the industry picks up, the company picks up in rally a bit late, but it goes beyond the index ka level. And at the same time, when industry starts falling, it falls to a lower low in comparison to index. But more or less we can say that the performance is in line with the paper company index. Stock price chart. The stock price had reached a low in 2014 to 17. From there it picked up. It went to around 34 from 4 rupees. So it's almost 8x 9x return in this specific period. Now I always keep on saying that looking at the charts and telling that कि अभी हमको यहाँ पे invest करना चाहिए and we will get superior returns is very easy. But we have to find out कि is it possible for us to decide the entry point timing using some values, some numbers. Let's see that. From 13 onwards, the revenue has been very stagnant. Then the net income has also entered into negative territory. EPS has not been very significant and satisfactory. Stock price falling from 6.3 to 3.8, 3.8, 3.6, having a low. Then NOPAT to equity contribution was also in negative territory. The PB multiple was low throughout. Yeah. From 2017 onwards, there is a rally. 17-18 का rally है. This rally is justified by the increase in revenue, increase in EPS. The total liabilities have fallen. So the debt to equity has fallen. Equity has turned from negative to positive. Stock price went up from 4.9 to 20. Almost 38 was the high. 38, 34. NOPAT to equity contribution increased drastically. Now in this case, the PB multiple went from minus 0.1 to 1.7. That's a big increase. This rally is justified basis the increase in this revenue and increase in NOPAT numbers. Also, majority of the money has gone into reducing the liabilities. It also needs to be taken into consideration that fresh equity was infused in year 2018. So these are the financial. Let's just see, is the rally really justified, using some comments. Low initial valuation of 0.1 PB, but 0.1 PB तो throughout था. So should we have brought this stock in 17, 16, 15, 14, 13? Anytime if you had bought this stock, you would have received superior returns, except the holding period would have been longer. Then there was increase in NOPAT in financial 17 and 18. We have seen this. There was fresh equity infusion in financial year 2018, significant fall in total liabilities. Now, why should you invest in 2016? Why shouldn't you not invest in 13, 14 or 15? इसके लिए the index could be a good proxy, right? The index has started increasing from 16 onwards. So 16 onwards, if you were to take a position in this company, you would have expected a stronger return. So index के साथ अपना investment timing match करना is a really good option. If of course the other things such as valuations वगैरह attractive valuation पे मिल रहा है तभी subject to attractive valuations and other risk and return measures. Point supposing increase in share price, ये जो इंक्रीज हुआ है रेवेन्यू में एंड नोपैट वगैरह जो इंक्रीज हुआ है विच जस्टिफाइज दिस रैली, फिर भी इट इज़ वेरी डिफिकल्ट टू take a position in this stock considering the earlier fundamentals. Earlier fundamentals are very poor. Total revenue का if you see it's very stagnant. Net income कुछ खास नहीं है. Then NOPAT to equity is in negative territory. The stock has a total negative equity. So in this case, it becomes very difficult for one to take a position in the stock. But of course, risk लोगे तो you will get superior returns. Matching the stock with the index becomes extremely important in this case. Then what are the points supporting buy recommendation? Nil. Let me tell you why nil, because the sell recommendations are overpowering. Let's just see the sell recommendations. Point supporting sell recommendation. The PV multiple as of financial 2022 stands at 1.1. The industry average is 1.0. The top industries average is at 1.0. In that case, 1.1 for a, what I can say, 40 crore market cap company seems extremely high. Then company ka debt to equity ratio over the years, it had reduced to some extent, then again it has increased. So finance cost is considerably high in this case. This is a negative point. Then the industry has reached its peak. Paper industry is facing a huge risk due to increased focus on digital paperwork. Nowadays, most of the paperwork is happening on through digital, mobiles, laptops, emails, etc., etc. Paper का जो requirement है paper industry, really there isn't a lot of scope going forward. So this is the company profile in a nutshell. Okay, thanks.